moving over now to the West End in the Nigerian fixed income space. Now, 85 billion naira yesterday was sold in bonds ranging between 5 and 20 years at Nigeria's 6th monthly debt auction of the year. Let's review the outcome of that auction and also the expectations for rates going forward with Thaddeus Udegbe, his fixed income dealer at Diamond Bank. Thanks for your time, Thaddeus. Let's just talk a little bit about that auction yesterday. Now, we know that the Nigerian market has been under pressure, like all other markets around the emerging market space, because money is going back to the US. Is that in any way being reflected in the demand that you're seeing at the auctions?
Yeah, thank you. Yesterday, the bond, the DMO held an auction for June. At that auction, about 85 billion worth of FGM bonds were offered for sale. About 25 billion for the April 2015 bond, 35 billion for the April 2017 bond, and 25 billion for the July 2030 bond. Now, in that auction, the DMO eventually sold just 2.4 million for the April 2015 bond against the offer of about 25 billion at a stop yield of 12.25% against the last stop rate of 11.66%. While for the April 2017 bond, the DMO offered 35 billion of that bond and just sold about 18.8 billion below what was offered at a stop yield of about 13%. Yeah. Against what was sold at the last auction of about 12.25%. While for the 20-year bond, which is the July 2013 bond, the DMO offered 25 billion and sold just 1 billion against what was sold at the last auction. At the last auction for July 2030 bond, the DMO sold at a stop yield of about 12.77%. If you look at this result and compare it to what the secondary market for these maturities are doing at the moment, you find that the secondary market for these bonds are already at 14%, while the DMO stopped at 13% levels. This, to me, is going to be a shocker to the market, because this is the first time in several years that DMO has not sold up to what was offered. Yeah. If you look at the total sales, it's just simply 20 billion that was sold against what is on offer, about 85 billion. So I don't think I have a view on how market will react to this today. But for me, I think the market will gradually adjust slightly to auction level, but it will not get exactly to auction level. Yeah. But I expect to see a lot of volatility in that market today, yeah, as a result of the auction result.
What's that saying about demand for Nigerian assets then? Is this, do you think, in any way an indication that perhaps people are beginning to be a little bit concerned about pricing and some of the yields that we're seeing out of the Nigerian space? Or is this a global phenomenon that we're seeing across the world with emerging markets bonds coming under pressure because of the concern around the US Federal Reserve beginning to taper down that money flow that we've been seeing from them for the last few years?
Absolutely. If you look at the yield curve today and compare it to the last 10 trading days, you find out that there's a lot of sell-off in the market. We've seen significant rise in yield. Both by foreign and domestic investors, we've seen a huge sell-off from those ends. Yeah. For the foreign investors, we think the foreign investors are much more worried about the improvement in the U.S. economy. If you look at the recent releases from the U.S. economic zone, U.S. data, you find out that the U.S. economy is improving from the recent employment data and all the rest of them. And of course, most of these foreign investors are U.S. investors, and they had borrowed from the U.S. to invest in high yield in Nigeria. So a lot of them are now pulling back, in expectation that the U.S. economy is picking up, and that, of course, that the U.S. Fed might begin to taper off its QE3 program. Yeah. Now, on the domestic scene, a number of domestic investors and traders are also concerned that the rising fiscal deficits, the rising fiscal spending, yeah, as is seen in the first quarter 2013 for Nigeria, is on the rise, and a lot of domestic investors are worried that the CBN might respond to this development by raising either CRR, the cash reserve requirement, or the monetary policy rate.
Yeah. So with that, then for the Nigerian bond market, are we likely to see then this pressure continuing and perhaps yields continuing to rise further going into the future?
Well, like I said, at the moment, the benchmark bonds are trading at 14% and above, while the auction came in at 13%. Yeah. For me, I think the market is gradually correcting. At the moment, the market will continue to remain at this high level as long as these foreign investors continue to put up a sell order. So I don't expect to see any significant decline in yields, even with the low yield at the auction, given where market is doing today.